Goldman Sachs, one of the most powerful financial institutions on the planet, hundreds of billions in assets, thousands of highly paid employees, and right now, as we're recording this, Goldman Sachs is quietly replacing some of those employees, not with cheaper workers overseas, not with outsourcing, but with an AI that reads, thinks, decides, and acts autonomously around the clock without a salary, without benefits, and without ever needing a coffee break. This isn't a future prediction. This isn't a think piece about what might happen in 10 years. This is already happening. Goldman has embedded engineers from an AI company directly inside the bank for the last 6 months, building what their own CIO is calling, quote, digital coworkers. And Goldman is just the one we know about publicly. JPMorgan, Citigroup, Wells Fargo, Bank of America, Capital One, Lloyds in the UK. They are all doing versions of the same thing right now. So today we're asking 3 questions that I think every single person watching this channel needs to be able to answer. 1, what exactly is happening inside the world's biggest banks? 2, should you be worried about your job? And 3, and this is the one most people miss, how do you actually make money from this shift as an investor? Stay with me, because the answers might surprise you, and they're going to change how you look at your bank account, your career, and your portfolio. Before we get into the money side of this, I want to make sure you understand what we're actually talking about, because there's a critical distinction that most coverage completely blurs. For the last decade, banks have used AI for relatively narrow tasks: fraud detection, basic chatbots, credit scoring algorithms. That's the old model. It's useful. It's been around for years. It's not what we're talking about today. What's happening now is categorically different. We're in the era of what the industry calls agentic AI, systems that don't just answer questions or flag anomalies. They break down complex multi-step tasks, plan a sequence of actions, execute those actions across multiple systems simultaneously, and make judgment calls in real time, without a human in the loop for every decision. Let me give you the most concrete example available right now. Goldman Sachs has spent the last 6 months with engineers from Anthropic, the AI company behind the Claude model, literally embedded inside Goldman's offices, building autonomous agents for 2 specific things. First, trade and transaction accounting. When billions of dollars move through Goldman systems every single day, there is an enormous amount of reconciliation work, matching trades, resolving discrepancies, flagging errors. That used to take teams of people and days of processing. The AI agents are being built to handle this continuously, at scale, in near real time. Second, client vetting and onboarding. Bringing on a new institutional client at Goldman involves parsing hundreds of documents, checking compliance requirements across multiple jurisdictions, verifying identities, assessing risk. The AI agents read, interpret, and process all of that. Functions that Goldman's CIO says combine parsing massive amounts of data with applying complex rules and judgment, exactly the kind of work they originally assumed only humans could do well. And here's the detail that really stopped Goldman executives in their tracks. They started using this AI for coding. Then they asked, what if we tried it on accounting, on compliance? They were, in their own words, surprised at how capable it was. That surprise is now driving expansion across the entire firm. Goldman isn't alone. Lloyds Banking Group in the UK is deploying an agentic AI financial assistant to over 21 million customers, handling spending analysis, savings guidance, and eventually mortgage applications. JPMorgan is using AI agents to help build investment banking pitch decks and automate internal workflows. Citigroup has rolled out an internal productivity platform that handles complex multi-step tasks across apps and systems. Capital One has a live customer-facing agentic tool already in production. The World Economic Forum calls this the shift from AI assistance to AI transactional authority. Banks are no longer just using AI to help humans work faster. They are building AI systems to replace entire categories of human work entirely. Okay, let's address the elephant in the room, because I know some of you watching this work in banking or finance, or you have family members who do. Are jobs going to be cut? Yes, some already are. Is it the apocalyptic wipeout that some headlines suggest? No, and the evidence is actually more nuanced and more interesting than either extreme. Here's what the data actually shows. Banking headcounts right now are largely flat. Wells Fargo's CEO has noted that their workforce has barely changed for a decade. Even as the business grew, automation absorbed the growth. PNC's CEO says AI will push that same flat trend further. Citi says it's recorded a 9% productivity improvement in software development from AI tools alone. But here's the more honest picture. Banks are planning for smaller workforces. Goldman CEO David Solomon has said publicly that future headcount growth will be limited during the AI transition. Wells Fargo's signals around severance costs suggest preparations are underway, and experts have warned that up to 200,000 banking jobs could be at risk in 2026 specifically. Not all of those from direct AI replacement, but from restructuring accelerated by AI efficiency gains. The roles most exposed are the ones that Goldman is already automating: high volume, rules based, process intensive work, trade reconciliation, document processing, basic compliance checks, junior analyst research tasks, entry level financial modeling. These are not low skill jobs. They are well paying jobs that smart, educated people have built careers around. And they are exactly the kind of structured, logical work that agentic AI is proving to be genuinely exceptional at. The roles that are more resilient are the ones that require relationship management, strategic judgment, creativity, and reading people in a room. Senior banking relationships, M&A negotiation, risk management in genuinely novel situations, roles where the context changes in ways that can't be fully pre-programmed. McKinsey estimates that generative AI could deliver between $200 billion and $340 billion in annual value for the banking sector, largely through those productivity improvements. That is an enormous amount of value being extracted from what used to be human labor. The honest answer to the jobs question is this: if your role in finance involves doing the same structured tasks repeatedly with high volume and low ambiguity, start building new skills now. Not because you're going to lose your job next week, but because the window to reposition proactively is narrowing. Now let's flip this around, because this story isn't just about Wall Street back offices. It's about to change your relationship with your own money in ways most people haven't fully processed. Think about what banking looks like right now for most people. You call a number, you wait on hold, you get transferred, you explain the same thing 3 times to 3 different people, or you open an app, search through menus, and still can't quite figure out whether that transaction was actually fraudulent or just a weird charge from an airline. Here's what Lloyds Banking Group is building for its 21 million customers in 2026: an AI financial assistant that doesn't just answer questions, it acts. You can ask it why your spending went up last month, and it will analyze your transactions and explain it in plain language. You can tell it to pause a subscription you forgot about, and it will handle the cancellation. Eventually, you'll be able to ask it to help you apply for a mortgage, and it will process the forms, check your eligibility, surface the best rates, and walk you through the application. Autonomously, Capital One already has a live version of this in the market. JPMorgan is building toward it, and the competitive pressure means every major bank is going to be forced to match whatever the leaders deploy or lose customers to the banks that did. For consumers, this is largely good news: better service, faster responses, more personalized guidance, lower costs as bank efficiency improves. The question is whether those efficiency gains get passed to you, or whether banks pocket the savings as higher margins. History suggests it'll be some of both. But here's the angle that most personal finance channels completely miss. If you're a bank customer, you are also generating the data that makes these AI systems valuable: your spending patterns, your investment behavior, your loan repayment history. That data is becoming one of the most valuable assets in finance. And right now, you own zero of it. Okay, here's the section you've been waiting for. How do you position your portfolio around the AI banking revolution? And I want to be clear up front. This is a framework for thinking, not a stock tip. Do your own research. Talk to a financial advisor. but let me give you the mental model that Wall Street uses to think about waves like this. It's called the picks and shovels approach. During the gold rush, the people who reliably made money weren't necessarily the miners. They were the people selling the picks, the shovels, the jeans, the food, the infrastructure the miners needed to operate. In tech investment, this means looking for the companies enabling the revolution, not just the ones making headlines from it. So let's apply that to AI in banking. There are 4 layers worth understanding. Layer 1, the AI model providers, the companies whose actual AI is doing the work inside the banks. Anthropic, private, not publicly traded yet, is literally embedded inside Goldman Sachs right now. OpenAI has partnerships across financial services. But the publicly accessible play in this layer is through the hyperscalers who host and distribute these models. Microsoft, Amazon, and Google, all of whom provide the cloud infrastructure these AI systems run on. Layer 2, the semiconductor and compute layer. Every AI agent running at Goldman, Lloyds, and JPMorgan needs hardware to run on. That hardware is dominated by NVIDIA. Goldman Sachs' own research team projects that the largest hyperscale cloud companies will pour over $500 billion into capital expenditures in 2026, and the majority of that flows through chips. NVIDIA's relationship to AI infrastructure right now is as foundational as electricity to the Industrial Revolution, Layer 3, the banks themselves. Here's the counterintuitive play. The banks deploying AI most aggressively are not just cost-cutting. They're building a competitive moat. JPMorgan, which has been among the most aggressive AI adopters on Wall Street, could see significant margin expansion as AI-driven efficiencies flow to the bottom line. The banks that win the AI race could see their cost-to-income ratios improve dramatically, which directly lifts earnings per share over a multi-year horizon. Layer 4, the data and compliance layer. This is the most overlooked. Every AI system deployed inside a regulated financial institution needs to be audited, explained, and compliant with a growing web of financial regulations. Companies building the governance, explainability, and regulatory compliance infrastructure for AI and finance are the quiet winners that almost nobody is talking about yet. And then there's the other side of this trade, the potential losers. Traditional software companies whose products are being disrupted by AI that can do what their tools do, but better, cheaper, and faster. Legacy financial technology vendors whose moats are built on complexity rather than genuine value. Mid-sized banks that are too small to build proprietary AI systems, but too large and slow to adopt third-party solutions at the pace needed to stay competitive. The gap between AI leaders and AI laggards in banking is going to widen dramatically over the next 3 years. I'd be doing you a disservice if I close this video without talking about the risks, because agentic AI in banking is not a guaranteed utopia, and there are real, serious concerns that are being under-discussed. First, systemic risk. When AI systems are making autonomous decisions across millions of transactions simultaneously, a single flawed model or bad data input can propagate errors at a scale and speed no human team could. We haven't had a major AI-driven financial error at a systemically important bank yet, but the probability increases as these systems deepen into core operations. Second, security and fraud. The same AI capabilities that help banks detect fraud can be used by sophisticated bad actors to generate synthetic identities, forge documents, and create transactions that fool the AI detectors. It becomes an arms race, and the defenders are often one step behind. The accountability gap. When an AI agent makes a bad loan decision, denies a customer service incorrectly, or misclassifies a transaction, who is responsible? The bank, the AI provider, the regulator? Right now, those accountability frameworks are still being written. And until they are, there is real legal and reputational exposure for every institution deploying these systems at scale. Understanding these risks doesn't mean avoiding this story. It means investing in it with your eyes open and watching for the regulatory moments that could reshape the entire landscape quickly. And for everyone, your bank is about to feel very different. Faster, more personal, more capable, and built on systems that are making autonomous decisions about your money. Paying attention to how that happens and who benefits is exactly what this channel is here to help you do. That's a wrap on video. Thank you for being here at the beginning of this channel. If these videos have been valuable to you, please subscribe, hit the like button, and most importantly, share this with one person in your life who you think needs to understand what's happening in the financial world right now. Drop a comment below. Are you excited about AI in banking, or does it make you nervous? I want to know where you stand. I read every single one.